Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking. As we try to navigate through the topsy-turvy, upside-down world, we find ourselves seeking greener pastures on the other side, coming out healthier, wealthier, and wiser. Okay, so on the agenda today, we're going to take a look at the unemployment problem, so-called hidden unemployment problem. We're also going to take a look at U.S. consumer confidence, which seems to be rising, surprisingly, but we'll take a look at that, and that's another example of how these numbers are being massaged or manipulated or teased to create whatever they want. And we'll also take a look at the economic recovery and revisit what type of letters of the alphabet we might be in. So let's get going here in Market Watch. So-called hidden unemployment is masking the jobless problem in Europe. The official unemployment rate in the Eurozone hasn't spiked to nearly the same degree as the US. The official Eurozone unemployment rate only rose to 7.9% in July from 7.2% before the pandemic. And I think, of course, again, this is just all massage, mirrors, smoke, and manipulation. The official Eurozone unemployment rate only rose. In the US, the jobless rate spiked as high as 14.7% from 3.5% in March. The US unemployment rate has subsequently declined to 8.4% in August. And of course, all these numbers need to be taken with large grains of salt because they're not necessarily looking at all the people who we would be considering as being unemployed. And we'll take a look at this, for example, in Europe here. Behind those numbers lie two issues that are masking the jobless problem in Europe. In the first, he notes, this is Mark de Muison, an economist again from Deutsche Bank. First, he notes that there are the furlough programs across Europe. The way Eurostat measures employment, even workers on 0 hours are counted as employed. So obviously, that's sort of a bit of nonsense. And he reckons and estimates that between 5 and 10% of all workers were on a furlough program. So probably at least potentially double, 50% larger, I would think at least. And then, of course, another issue is that those workers who lost their jobs weren't able to look for a new one because of all the pandemic closures and all of that. Without school closures and lockdowns in the second half of 2020, these people should start appearing in unemployment rate statistics, he says. So I guess expect the numbers to increase, as I think we probably will start to see the numbers increasing here in the United States soon. U.S. consumer confidence posts the biggest gain in 17 years. Downside risks remain. U.S. consumer confidence rebounded by the most in 17 years in September amid an improvement in labor market views, but it remained below levels that prevailed before the COVID-19 pandemic. The surge in confidence reported by the Conference Board on Tuesday came despite a resurgence in new coronavirus cases in some parts of the country and government help for businesses and the unemployed drying up. The Conference Board's Consumer Confidence Index increased 15.5 points to a reading of 101.8 this month. That was the largest gain since April 2003. Economists polled by Reuters had forecast the index edging up to a reading of 89.5% in September. The jump in the Conference Board's Confidence Index is at odds with a modest increase in the University of Michigan's Consumer Sentiment Gauge. Economists said the rise in the Conference Board measure was driven by higher income households who have been least affected by unemployment during the pandemic. So there you go. That's obviously part of what the problem is. Who you're obviously polling will give you the answers that perhaps you're looking for, right? And I think, part of the problem we find ourselves in is that nobody's really taking a look under the hood of what's going on with the 50%, the bottom 50% who are really struggling and who this pandemic is impacting the greatest. And of course, that's a big portion of people who could be consuming more and aren't. So I don't think this bodes well for the future necessarily either. Welcome to the Wshaped recovery. James Rickards, a gold bull, as many of you know. Here we are in late September and the pandemic is still with us. Many business lockdowns are happening again after a brief reopening phase in August. Initial claims for unemployment are rising again after dropping in the late summer. Pent-up demand was always a myth. For example, if you skipped 10 dinners at a restaurant during the lockdown, you weren't going to order 10 meals the next time you went out for dinner. You would have just one. That's a fair point. I think, this article does give some credence to this. Of course, we heard from Jim Rickards earlier, who was thinking that U.S. might confiscate China's treasuries, which would be quite unusual, and I'm not sure that exactly will happen. Yet are things even worse than an L-shaped recovery? The evidence is that the recovery is not L-shaped, much less V-shaped. It's more of a W, which means down, up, down, up. seem to be hitting a second downstage, and it may last longer than the downstage of March and April, he says. When you count all government debt, the debt to GDP ratio is around 135%, which is well in the danger zone, anything greater than 90%, and puts the US in the same league as Greece, Italy, and Lebanon. So that's quite interesting, and I thought I wanted to bring that to your attention because the official figures you'll probably see are only around 100%, but if you count it properly, as he's done here, 135% is just, it's a huge problem. It's going to create a huge, huge problem, I'm sure. Okay, let's take a look at the stock markets today. Okay, so fairly flat today. We'll see what happens for the rest of the afternoon. You can see the S&P 500 is exactly on zero, and NASDAQ just down 15 basis points or so, and the Dow just down 5 basis points. And interestingly, gold is flirting again with 1900, which will be a bit of a resistance, I'm sure, up around this area. Now that it's broken through that support, we'll see what happens, but gold, again, probably going to be stabilizing a little bit. I just can't tell really what's happening with gold here. Time will tell, of course. I'm expecting it to go lower, but who knows? We'll have to wait and see. Okay, and here is silver, hitting a little bit of maybe light resistance here. Still up 33.86% from the beginning of the year, so not too bad. All right, on to cryptocurrencies. Here we are. Cryptocurrencies down about 0.3%. So the market cap $348 billion, 5,917 coins for your purchase and pleasure. So those are going up again. A lot of shit coins, as they call them, probably available now. Bitcoin dominance just up a hair, 0.1% higher, 57.1%. You can see here that the top 15, 14 coins or so, sort of a mixed bag, relatively flat, Polkadot down a bit. Not much else going on really. Monero up a little bit, which is great. That's a privacy coin. Trying to make payments and that kind of use of cryptocurrencies a lot more anonymous. Stellar continues to be under a little bit of pressure. I wonder if it'll break down below 7 cents here at some point. We will find out, of course. And minus 9% for year-end finance, but that moves up and down quite aggressively as we've been watching. And of course, Uniswap down as well. So it's probably going to break down below $4 here, I'm sure. But we'll see. Well, it'll be interesting to see how Uniswap does when we get into the bull run. Okay, on to the online economist, online oracle, the 8-ball economist, for today's most pressing question. So I thought it would be an interesting question to ask the online oracle. If Joe Biden won the presidential debate last night, I didn't actually watch it. I thought it would be as disastrous as it appears to have been. If we take a look here at CNBC, for example, seems to indicate it was a vicious first debate, offered little on policy, lots on conflict. One GOP pollster says Trump-Biden debate encouraged people not to vote. So I'd love to hear from you down below what you thought about it. But it seems that it's probably ridiculous how these folks were probably behaving and not even discussing real issues that are affecting most people, right? So, so you can see here it was just a real disaster. Everybody interrupting everyone else. So I didn't watch it. It was interesting. Be interesting to see. Let's actually see what the online oracle thinks. Did Joe Biden win the presidential debate last night? You may rely on it. Okay, well, maybe that's not saying much. If it was such a disaster, a train wreck, it'd be interesting to see what that means. If the polls are going to improve for Biden or Trump based on that, it was probably an even wash, I think, depending on how they both maybe were. I think what's just happening, folks, is that people are just getting entrenched on either side. And no good is coming of this, unfortunately. My fear, though, and worry is that not enough people are going to be out to vote to really give a honest look at what the average American thinks of this whole debacle. I would really love to see a 70-80% voter turnout rate. Really 80% or more would be ideal. And at least you get a real sense of what the average American, what the hive mind seems to think and what they want in their next president. But of course, in my opinion, neither are particularly outstanding choices. Be interesting to watch. Could be a much closer race than perhaps we believe. Anyway, there you have it. Thanks so much for joining me. Appreciate you spending the time with me and leaving your comments below. So please remember to stay safe out there. The pandemic is ongoing. Pay down some debt, squirrel away some savings. Things are not, we're not out of the woods yet. I think things will get a little bit worse before they get better. Here you have an example of what's going to be happening in the next several weeks or few weeks as we head up to the election. So Remember, above all else, dom spiro, spero.